Are you curious about how PayPal performed in the last quarter and why the stock price started to rise? Maybe you want to know what analysts predict for the stock price, and in contrast, how the situation looks from the perspective of an amateur investor. Or perhaps you just want to know how I'm playing this situation. Hi guys, welcome back. This is the Smart Invest. Let's quickly clarify that this video does not provide financial advice. It's merely the opinion of an amateur investor and the presentation of facts for educational purposes. Taking a glance at PayPal's chart, one might initially mistake it for some shitcoin rather than a giant American company providing outstanding financial services. But let's quickly look at what led us here. Looking at PayPal's valuation indicators at that time, one could even say that there were signs to be noticed, not requiring too high IQ. Simply put, a solid 50% brutal drop was already quite perceptible. However, as often happens in the cold and ruthless reality, those external factors arrived. One example is the painful breakup with eBay, followed shortly by the aggressive expansion of Apple Pay. These seemingly small but noteworthy factors were enough to make investors who were blinded by greed start thinking. And of course, even this only made the wiser investors contemplate. My hairstylist made $100,000 from his grandmother's savings. He had $500,000 when he started. Now here we, the wiser ones, sit and marvel at this amazing opportunity, knowing that we didn't lose a ton of money on PayPal stocks recklessly in the past 2 years. We didn't lose a lot, right? A few weeks ago, something unusual happened in PayPal's life. They published their third quarter report, and after that, the stock price started going up, not down, as we have become accustomed to in recent times. So let's see what could be in that magical report. And of course, let's see where we are starting from. At the current price, PayPal's market capitalization is $64 billion. The 17 PE ratio and 11 forward PE ratio might catch your attention. Could this be the turning point? What do our wonderful and sharp analysts say in this situation? For the next 12 months, they agree on a friendly stock price around $80, but we can see possible values ranging from $120 to $55. Analysts don't anticipate a significant decline. For 2028, they expect a doubling of earnings per share and a 70% increase in revenue. If we look further, there's even a target price of $200 for 2030. Now let's see that report. We can see that PayPal delivered positive numbers in every aspect, at least compared to its performance a year ago. The total payment volume increased by 15%, and this graph is finally starting to look good again. They achieved growth in every sector, but it's worth mentioning that higher than average inflation contributed to these increases. Although the number of active accounts decreased by 1%, transactions per active account increased by 13%, which is very positive. They have been maintaining this around 13% growth in recent quarters, which is also very promising. PayPal's services cover a wide range, and they are constantly trying to keep up with the changing world. We can see that they are open to the crypto direction as well, so much so that they launched their own stablecoin, PayPal USD. This innovative move was so successful that even the SEC summoned PayPal to have a little chat about it. The SEC want to ask them how exactly they thought about it. We hope the members of the board won't be reporting from prison at the end of the story due to mischief with crypto assets. But of course, this couldn't happen in our modern times, right? Earnings per share achieved a 25% increase year to date, which is not a bad performance. But let's see how they spend the money they earn. Here I notice something very positive. But first, quickly, a simple like or comment can help the algorithm and sponsor my hard work, guys. Thank you a lot for that. After the massive drop, PayPal started buying back shares in large quantities, which is a particularly good move in such situations. With this, they can reassure major shareholders, and thanks to the low stock price, they can create significant deflation with relatively little money. In the past 12 months, they bought back 5% of all shares, which is a great result. And if we look at PayPal's current valuation, it seems a bit better than 3 years ago. The price-to-sale ratio is at a quite modest level. In fact, if we want to go further, it looks better than it did 10 years ago. The price-to-book value has not been at such a low level since 2017. But what else is happening around PayPal these days? We already mentioned the SEC investigation into PayPal's new stablecoin. We can see that the SEC is not so thrilled with various crypto experiments. They are not necessarily accelerating the development of the sector right now. But there's something else interesting here. In Europe, people trust PayPal more than banks. I'd even say something better than that. Surprisingly, even in giant corporations that are extremely cautious with personal data and, of course, never misuse it, people trust more than in the federal government. We're heading in quite an interesting direction when people trust Amazon and Google more than the federal government. And finally, PayPal starts organizing its operations in 3 units. It's the 3 units we've seen before, one for large corporations and the other 2 for everyone else. This may seem like a big nothing at first glance, but they expect more efficient operation from the separated sectors, and focusing will be simpler when each sector is managed by a separate management. And we all know that focus is the most important. But how did I play this opportunity? Like a true impatient investor, relatively quickly, already in March 2022, I started buying PayPal shares around $120. Of course, you might say, well, I also lost money on PayPal. But it's still much better to start buying something here, my friends. Actually, I found the PayPal valuation acceptable around $120, but of course, I tried to take advantage of further declines. Currently, the average cost is around $70 per share, and the position is currently 15% in the red. Currently, my PayPal shares make up 4% of the total portfolio. In my opinion, there is still plenty of opportunity for future growth in the stock price. And if investor sentiment turns slightly more positive around PayPal, I consider a stock price of $150 possible in the next 2 years, which wouldn't be a bad return in 2 years. If you liked the video, found it informative, and would like to help me on my journey toward 1,000 subscribers, please press the like button and subscribe. Take care, guys, and see you on the next episode. Try not to lose all your money in the stock market until the next video.